What is good, guys? Today we're going to be going over a topic that has been very highly requested. If you're in my free Discord, you'll see that I post my daily bias before the session every single day, and maybe 8 or 9 times out of 10 it is bang on. So I always get people asking me, how do you do it? How do you find your daily bias and find the drawn liquidity that you want to get taken for the day? But that is what this video is going to be about. I'm just going to backtest some days, talk through my thought process as if it was today, and how I would find my drawn liquidity and what my daily bias would be. So let's jump straight into it. The first thing I want to say is I never get onto the charts too early. I'll never be on half an hour before checking my bias and stuff. 20-15 minutes before, have a look at your daily bias. This means that you won't overthink it and get analysis paralysis. So you'll see the charts for what they are. You're not going to be looking into every little detail, because the way I think about it, there will always be something saying you're bullish and there will always be something saying you're bearish. So you just need to figure out what the overweighing one is. So are we more bullish or are we more bearish? There will be days that are more obvious than others. There will be days where you're like, we're so bullish, there's nothing bearish I can see. I get that, but that is not going to be the case every single day. So coming into the day, I will start on the 4-hour time frame, and what we can see here is we've had a liquidity sweep here, and if we go on the hourly time frame, we have an hourly IFEG to the upside. So this liquidity sweep paired with this hourly IFEG is a really good confluence to send prices higher. So to then find my drawn liquidity, I'll look on these time frames and see, do we have any unmitigated fair value gaps, any swing highs and lows? So straight away, looking on the 4-hour, we have a high here and we also have a high above. I think these targets are quite far away, so those are almost 400 points away, so we probably won't come for this target up here. Possibly we may come for that. It is a little bit of a reach, but it is possible. If we then go on to the hourly, we'll see that we don't really have many targets here. It kind of is just this swing high, but we don't really have anything like slowing us. There's no fair value gaps in this leg. There's nothing that price is going to hold up off of. So I do think this high here could be a really good drawn liquidity. Now, that's not to say that I'm necessarily going to target it if I do get a trade, because it is almost 400 points away, but you can take a trade in that direction assuming that we're going to come up for it. The main confluences I use are fair value gaps and liquidity. That is all you need to be using to find your daily bias. Do not overcomplicate it. There are 10 different confluences you could use, but you're just going to confuse yourself. Keep it simple and look at what the market is telling you. On this day, I would be bullish up to these highs here. This may not necessarily hit in the session that I want, as it is quite far away, but this is my drawn liquidity. So I've just skipped ahead and we have actually hit that drawn liquidity. It did take a while after the session to come to it, but as you can see, if I show you the session, we did just pump up and open. So market open was here and we just came up. So if you found a trade in line with that bias, and like I said, you didn't necessarily need to target this as your drawn liquidity because it is far away, but there was no good drawn liquidity lower than that in my opinion. So this was my drawn liquidity for the day. We have hit it, but it is outside of the trading times. I trade from 9:30 to 11 New York time, or if you're in the UK like me, it's 2:30 to 4 p.m. So that would have ended around here and we wouldn't have actually hit the drawn liquidity, but as you can see, our daily bias was absolutely bang on. So we'll skip to the next day and we'll do it again. So the next day actually looks fairly similar. We did sweep this high here that I talked about, and I did also say that this 4-hour high inside of a fair value gap was a really good drawn liquidity, but it was just too far away. So now that it's the next day, we are only around 100 points away from it, so this is more than achievable as a good drawn liquidity today. We have now inversed this 4-hour fair value gap to the upside with really good momentum, so 100% I think this would be our drawn liquidity today by just looking at the 4-hour. If we go on the 1-hour, I can see that we have some good targets below to maybe come down, maybe sweep this hourly low in a fair value gap, and then we get a reaction back to the upside up to this drawn liquidity. So in an ideal scenario, I'd like to see us come down to then come up, but you know how the market goes. Sometimes we just pump up to it with no entry and without any retraces. So I'll skip ahead and we'll see what we do. But when we have a drawn liquidity like this, there's nothing holding us up. There's no fair value gaps that we haven't inversed. It's a really good drawn liquidity that we've come so near to. I wouldn't quite call it relative equal highs, but we have come really near to it. So a retracement is healthy to then push us up to that liquidity. So on this day, I was actually completely wrong about the drawn liquidity, and this is going to happen. You're not going to get it right every single day, but when you can get it right the majority of the time, and then you can find a trade in line with that to take up to the drawn liquidity or just in line with your bias, your win rate is going to massively improve. I don't preach that you need to get the drawn liquidity right every single day. There'll also be days where you're neutral and you don't really know, and you just have to sort of react to what price is telling you. And just because the drawn liquidity is wrong today doesn't mean that I've taken a loss in line with that bias either. So we'll skip to the next day and see if we can get the next one right. So if I zoom out on the hourly, we have this really nice swing low here. We then have these two stacked swing lows just here. And as well as that, on the hourly time frame, we have actually inversed this fair value gap to the downside. If we look on the 4-hour time frame, we have tapped into this bearish 4-hour gap and reacted extremely bearishly off of it. And we have 4-hour LRLR. So this is 100% a bearish day, and I can see us taking all of these lows. This bottom low is 350 points away, so again, maybe not achievable in this session, but these two lows minimum we should take. So I'll skip ahead and let's see what we do. So we've just taken both of these lows here. Let's see if we manage to come down for that next one. Bang. So a bang on drawn liquidity here. We have analysed the market really well. And if we could have found a trade in line with this, then you're going to make a lot of money. I'm not personally looking on the lower time frames for entries. I'm just going over my bias, so I don't know whether there would have been a trade or not. But today was bang on. We've just predicted a 400 point move to the downside. So that's 2 days out of 3 that your daily bias has been bang on, and you probably could have caught a really good trade. So when I look at the 4-hour time frame on this next day, there's nothing too obvious because there's not too much structure. We are just dumping to the downside with no obvious fair value gaps being respected or no obvious IFEGs. The one thing I can see is we have a really good drawn liquidity, being this 4-hour low inside of a fair value gap that we seem to be trending and displacing towards. On the hourly time frame, we did react out of this fair value gap here, respect it, and then we have had this move to the downside. So I think that 4-hour could be a good drawn liquidity today, although I wouldn't say this is the most obvious day, so I would be a little bit more neutral. It would be a case of that I'm probably leaning bearish. I can't really see an opportunity to long anyway unless we sweep that, so I'd probably be bearish down to that low, and if we sweep it then I would be happy to take a long. And some days are like this, they're not the most obvious. Like yesterday we had hourly IFEG, LRLR on the higher time frame, 3 really good targets, but you're not going to have that every day, so you have to just analyze the market and find what you think could be a good drawn liquidity. So let's skip ahead and see how it does. So we were actually right about this drawn liquidity. We have dumped down to it, and possibly you could then look for a long off of this. So I'll see if we react off of this, or we may just want to keep going lower. Okay, so we have had a really good reaction off of that. This is actually the way that I trade. So when we have higher time frame lows and highs inside of fair value gaps, I need to see the low swept in line with us respecting the fair value gap that the low is in, which we've done there, and then I look for an IFEG back to the upside on the lower time frames. Like I said, I'm not going to bore you all going into my whole strategy today. I'm just going to go over daily bias. So another day where we're bang on. We found our drawn liquidity, and we've also recognized that that drawn liquidity is, 1, a good target, but 2, the type of liquidity it is means that it's actually a good target to then long off of when we sweep it. So there's 2 scenarios that you can either get a trade down to it or a trade in the other direction once it's been swept. Being able to predict the market like this is a massive factor in your trading. You could be an IFEG trader who is unprofitable, but if you can find your daily bias and find where the market wants to go, and then just have your strategy in line with that, I promise you your win rate is going to skyrocket. So looking at this day here, we have had an hourly IFEG to the upside. We have an hourly high and a fair value gap above, and we also have a fair value gap that we may want to retrace into to push prices higher. Now, because we're so far down, there's not too much structure to the left, so I can't really say that we've had a liquidity sweep or anything like that, but we've had an hourly IFEG. We also have a fair value gap for us to tap into, and like I said, a really good drawn liquidity. We may even want to come all the way up here, but I think this hourly high and a fair value gap is a more achievable target, and it is just around 200 points away from current price. So my drawn liquidity would 100% be this. So let's see what we do. We have done exactly that. We tapped into this fair value gap, had a really good reaction off of it, and then we've come for this high. I know this is backtesting. I promise I'm not skipping ahead. I am doing this in live time. If you don't believe me, join the free Discord in my description. I call price out every single day before the session, and it is genuinely right 8 or 9 times out of 10. So you guys that are in the Discord know this is true. Now let's see if we come up to this next high. I do think this is maybe a little bit more unachievable, and this was the drawn liquidity for the day, but let's still test it. So we did actually end up coming up for that. Obviously it happened later on in the day, and that's something else I wanted to touch on. Me and you could have a very different drawn liquidity for the day. You could have a bearish drawn liquidity, I could have a bullish drawn liquidity. That doesn't mean one of us is wrong. There's nothing saying that price has to deliver in a certain session. Your drawn liquidity may deliver in the evening, mine may deliver in AM session, you know, so it doesn't mean you're wrong. And just because someone else has a drawn liquidity that you don't agree with, never change that. You will learn from making mistakes or being wrong about the drawn liquidity, about why things happen. So just find a drawn liquidity, don't change it, and then learn from it after you see what price has done. So again, we've predicted exactly what the market wanted to do. Sometimes I think I just need to not have a strategy and just, someone actually said this in my Discord, and just go for like a 1-to-1 with the drawn liquidity, because I genuinely think I would still be profitable doing it like that. I know that's not how you should trade, and obviously I'm not going to do that, but that is how important a drawn liquidity is. So this is a day where I would just come into the market being more neutral, and I would just mark out my lows and highs in fair value gaps and look for a trade in either direction, because we're holding a 4-hour gap here. We have then had a reaction out of it, great, but we are also holding a 4-hour gap here. So we have conflicting drawn liquidities. There's nothing really that clean to target. You know, it's just one of those days where there is nothing too obvious. So I would just either look for a trade maybe off of this 4-hour high, or if we got like a Judas swing off of open and swept this 4-hour low, and look for a trade in the other direction, because there is nothing A+ on this day. So we did actually do that. We came down, we swept the 4-hour low, and we do seem to now be pumping up and maybe hit that high there. Okay, so possibly a really good entry. I will actually just check the lower time frames for you guys, just to see if, because we're neutral, it doesn't mean you can't get a trade. We may have had a super clean trade off of that 4-hour low. So I feel like I remember taking this trade actually, but I'm not sure. We had a 4-hour low in a fair value gap swept, 1 minute IFEG to the upside, super clean. I would have taken this and I 100% would have banked. So, you know, even though we're neutral, you just set conditions. I want to see this 4-hour low in a fair value gap swept. If we react off it, I'll be happy to take a long, and you don't need to just hop off the charts and not take a trade. It is okay to take a trade when neutral. So let's go to the next day. But again, a really obvious bias for me on this day. So this is actually February of this year that I'm backtesting here. I had a really good month in February. I can't remember any of the drawn liquidities and stuff like that, but I had a really good trading month. I was up something like 5 or 6R, and going over this, it shows you why, because there was an obvious drawn liquidity most of the days that you can get right, and when you can get it right, you can make a lot of money. So on this day here, we have a 4-hour high inside of a fair value gap up here. We've inversed a 4-hour gap to the upside on the left here, and as well as that, we have previously tapped into this 4-hour gap here and had a really good reaction out of it. So 100% this 4-hour high in a fair value gap is my drawn liquidity. I wouldn't expect us to come much lower as well, because we do have a protected low down here. So maybe an ideal scenario could be that we retrace into this gap, take the 4-hour low in a fair value gap, and then for my model, I'd probably look for a trade off of that up towards this high. So let's see what we do. So we've just come down and taken that low inside of a fair value gap. Let's see if we react to the upside. So we did get a reaction to the upside. We then swept this internal high here. So you possibly could have caught a trade. Like, I probably wouldn't have gone all the way for this high because it is quite far away. We did sweep the low, had a reaction, and we did hit this high. So you maybe could have caught a win in there. I'm not going to look on the lower time frames, but we'll see if we continue down or if we do end up coming up for it. So in the end, we are respecting the gap, but we didn't end up coming up for it. But that's not to say that you couldn't have caught a trade. We did see a really good reaction off of the low we talked about, and we did sweep this internal high. So if you were targeting this high up here, maybe you would have got break even or not caught a win. But still, not a wrong bias. There was still opportunity in this market today. So we're going to end it there. I just wanted to show you guys how easy it actually is to find your drawn liquidity and find your daily bias. You don't need 100 different complemences, otherwise you're going to confuse yourself, and there is always going to be something telling you that you're wrong. Use fair value gaps and liquidity and you will find your daily bias. I post this every single day for free to help you out, so you can find your drawn liquidity and then compare it with mine. If you're not already in the free Discord, the link is in the description. Thank you guys for watching.